Good morning. Today is the 8th, right? Yes. 8th. Okay. Okay. Good morning to you. I actually potentially expect to see the market drop more today, but at the moment it's acting like it's not gonna. It's gonna go the other way. That'd be the correct thing for it to do. But based on how it behaved yesterday, I got the impression it wants to be wants to explore being ridiculous. I'm serious because the signs yesterday were that we're going to be increasing productivity in the workforce. That increases GDP. That causes deflation. And yet everyone was calling across the board that the fact that we're going to have a increased workforce is going to cause inflation. But unfortunately, that's year 101 economics. That's really not how it works. It's even less than year one. It's like kindergarten economics. An increase in productivity causes deflation. It strengthens our dollar. It strengthens our currency. It pays down debt. That pays down inflation, causes deflation, strengthens the dollar, and therefore the same goods and services that you bought before for X price, now with a stronger dollar, feels cheaper. Even if it's at the same price, it's easier to make the money. We're more productive. GDP. It's not a, let's say, easy thing to grasp. Like it takes some thinking about. But 2 weeks into economics class covering these topics, you can get it. And but unfortunately, not everybody gets it, and you even have some people who never got it and stick to their guns. Typically they're socialists in some way, shape, or form, which, I mean, as we know, is economically incorrect. This what do you call it? Wrong, like error, like divide by zero. Marxism, communism, socialism, all of those don't compute. They think they do, but there's like a flaw. There it is. They're flawed. And that wasn't written into the Marxist manifesto and book, in communist books on purpose, because they try to get you into the delusion of the whole thing. So anyway, you're going to still hear. A lot of people love socialism. You're going to still hear that argument, but it is incorrect. And increasing productivity will cause deflation, not inflation. And you hear people scream it's going to cause inflation. And that fight will happen in the market. I mean, you're going to see some days where it's not going the way it should. And that's just because that day, that's just the way the fight went. That's just the way the hands, who's tired and who's strong that day. But it's not about the individual battles so much as the whole war, right? So, you never know how a day's going to go. You just don't. You never really know. And it can switch up on you too. Midday, early, within 5 minutes of the open, at the end of the day, in after hours, in pre-market, every day. You really never know. So, but if you have a general economic understanding of what's going on, you know that overall, like this, This is our range of noise, all in here. And then below the 200, it changes. All of a sudden, we have something else going on, but we're not. So, the market can do what it has to do, and, it can walk over that way, and then it can walk over this way, and it can run for the hills. It can jump into a lake. It can do whatever it wants, but in general, it's a season. It's a good season economically, and it's not an ice age or something. It's not a bear market. So, in my opinion, and this is not financial advice. This show is educational only, educational purposes only. I am not a certified, registered financial advisor. I've been trading the market for 25 years, and I do have an in-depth study of economics. At the college level, since I was even in junior high school, I was going to college even before junior high school, by the way. But I mean, the economic studies started in junior high school. So, I do know a thing or two. And, so I'm not a registered financial advisor, but I know a thing or two. I've seen a thing or two, 25 years. And by the way, you shouldn't even listen to anybody who doesn't have at least 10 years under their belt, really. I mean, yeah, it's okay. You probably learn a few things, from them, and they probably have perhaps a good heart, and they want to teach if they have 4 years of time under their belt or whatever, and their intentions are good, but the better advice is to make sure you take it with the grain of salt, because you really need at least 10 years under your belt. As crazy as that is, I would love to, say that I, could be worth your time after 5 years of doing this stuff. But, I really wouldn't. And so you need 10 years. I got 25 years. So I've been through some of these cycles more than once. And I was ignorant and naive during the first times things happen to you. You don't know. You didn't know. You don't see them coming. But, over time, not only have I seen more, but I've decided to be more prepared. So I even know things I haven't seen that could happen, stuff that's could happen every 100 years, or rare events, this or that. So, it's not as easy as someone who's been trading for a couple of months or a few years, has become a millionaire, will tell you. It's just not. And you could follow them and you might become a millionaire. But they will probably lose all their money, and you will probably lose all your money, because it doesn't happen that fast correctly. That would be an unsafe way to risk. Although it's possible, okay? There's safe ways where it's possible. But you do need those market wins on your side. You need to have good timing and a little bit of luck on your side, and a lot of understanding and know-how to be able to control it. And you should know, because you're so knowledgeable about what you're doing, that what's happening is rare and fortunate, not that you actually kick ass and somehow can dominate the markets like King Kong every day, every week, every month, every year, every decade. It just doesn't work that way. So anyway, we are in a good season economically, and don't really let anyone who has less than 10 years under their belt tell you otherwise. And even if they have more than that, beware that maybe 40% of people are socialists by nature, and so they have what do you call it? Not predisposition, but they have an incentive because of their circles, their friends, how they obtain resources through those circles and friends are more socialist, and so they hang their hat on those beliefs so that they can reap the reward of what that can bring in. But a socialist system in and of itself in a vacuum implodes. But a socialist system coexisting in a capitalist system, of course, it can always leach. It's they never get the proper lesson. But so beware of who you listen to, and start to gain some knowledge about all this stuff so that you can kind of even understand. I think I'm covering up a little bit of one of this there. Boop, there we go. Okay, cool. Oh, and I'm missing the Discord little window. I wonder what happened to that. Oh, there it is. Huh. Let's see if I can get this little Discord window. Usually shows up here. And it's not showing up. Let's see. Discord chat. Huh. Well, I'll have to figure out why that's not showing up. Next time. It's always something every day. All right. Well, anyway. Thanks for joining in. And the market's going to be opening in about 18 minutes. And it's exactly where it closed at the moment. It was actually a little bit improved. And then we had this jobs report, which said that there's less jobless claims than expected. Obviously, that's a positive. But some people worry that means inflation, and so therefore higher rates, and so therefore a pressure on businesses being able to pay for growth costs, get loans in order to expand their businesses would be more costly because rates are higher, and so therefore that'll put pressure on the equities growth market. But again, like I said, that's upside down thinking. That is incorrect. But it doesn't matter. The opinions are there, and so the fight will exist. And some days one will be stronger than the other cares to be, and so that fight will go on. All right, so we really don't know how this day is going to move, but yesterday's move is right in concordance with what I was saying, which is that we're in 4 points to a downtrend, and that my expectation was for us to reverse soon, and yesterday was it. I didn't think it would be yesterday. I thought maybe we'd put in one more day, and then we'd come back, and then we'd slowly work our way back down. No, we did a pretty instantaneous about face. So now we're moving down this way, and if we're still in a downtrend, then we might see something like this for a while. But Trump takes office on the 20th, and maybe that will change something, and we'll see a change. Maybe we'll break this low before he gets into office. He gets into office, and then we have a fast right side reclaim. I mean, this is an idea. This can happen. So, but until then, the sentiment is unchanged. And like we talked about yesterday, the market's just sort of stalling. Just sort of stalling out. We're sort of waiting for further goodness to be proven. So there you have it. All right, now, this morning in pre-market, what have we got going on? Santa, Kerr, Silo. Let's take a look. Yeah, that's no good. Kerr. Yep, that's no good. Silo. Could be good. It's not very proven yet. And and just because of that alone, it might have some gas in it, but it might only pop and then drop. But this one could do something as far as if you're day trading, if you like doing that. Silo. So I'll put that up here in the corner, I guess. Something we're watching. But I wouldn't even invest in this or even swing trade it. Maybe as a penny stock type of swing trade, but not a position trade. So like a short flip, but it's almost a day trade, Anyway, it's at most really it's kind of a day trade. That's what I'm getting at. Silo TPET is another one. Let's see. No. Although, that can change. Eon R. Absolutely not. Let's see, excuse me. It's just an ACCD. That's a buyout, merger, acquisition. So no go. CDT. I don't like these moves at all. It's very flighty. CDT JBDI. We're down to 39%ers now. Nope. ABC. Nope. IPSIC. Nope. SLTB. No. So these are all the sort of pre-market gappers that are gapping up strong. That was 10% all the way up. Everything else is NLSP, is XHG. Not really qualifying. NLSP. Okay. So that's it. Just maybe Silo, and even that, it's not proven yet. Like I don't see something that shows me it's going to follow through and go. So you don't need to mess around with that, essentially. Let's see here. So pre-market, let's see if we have anything. Yeah, I'm probably going to have to cut my quantum stocks because NVIDIA basically said it's that quantum computing will not be useful for around a minimum of 15 years from now. It won't have practical mass production consumption application for about like 15 years. That's what the CEO of NVIDIA said. Minimum. And he said, not 30, but probably over 20. So, think 20 years for useful, commercial, consumer, practical, mass money-making, revenue-generating, mass-producing application. So that's caused stocks like Qubit to drop like 30%. Qubits. And the other one was, I think, this one. Yeah. What did they drop? Okay, let's see what it says here. It's down, 30%. So all quantum stocks are down roughly, let's just say generally, 30%. So I have a few of those. They were leading, and so now they got hammered. Oh, IonQ is the other one. So they're getting close to my stop. And when they get there and I get stopped out, I will cut it. And that's just the way the cookie crumbles sometimes. It's like solar. Remember, like everyone was all over solar in the on the stock market in the probably late 80s and 90s, even 2000s. Nothing, just flatline. Sort of like how marijuana stocks were for a long time as well. So a lot of these themes are premature, quite premature. But that doesn't mean they don't pop and they don't have excitement and they don't get excited. But they have downside, you know, if they've already been pumped, because they're still far off from profitable application in any mass way. We're lucky that Tesla did what it did, with electric cars, because prior to Tesla, electric cars were fucking silly looking. I mean, what was that one? Prius and stuff. I mean, or they had all, like, Ed Begley Jr. was driving this weird thing around. So we're lucky that we even got ushered some green, solar, electrical, growth in those industries. But it's been 40 years coming, so it takes a long time for some of these things sometimes to get there. That's pretty normal. All right, 9 minutes until the market opens. And so those are the things that I've got to watch and probably cut the most easily and most readily is IonQ, qubits, and qubits. But there's other, you may have other quantum stocks, and I too, and I just don't even realize it. Like, let me see what else is down strongly. Sound, so that's a little bit AI related. SoundHound. Olo pulled back pretty strongly. In the meantime, I have a couple of things up in pre-market, but not really. Flat, but most things are down, have been tugged down by the market trying to do a lot of correcting. Tomorrow will be no market. The market will be closed because of the markets always respect the day of mourning after a president has been laid to rest. That's a tradition. And so markets closed tomorrow, Thursday, and then back open on Friday. So we might even see, it depends on how the market wants to think about that, but it's possible we'll see today as a light trading day, and Friday too, and that Monday will really kick off some more serious sessions. But it also could be that the market wants to take a lot of actions today, seeing as they'll be in a rush to do so this week because it keeps getting cut off as it does. The momentum keeps getting cut off. I don't know. We'll see how it goes. All right, 7 minutes to the open. Yeah, I don't like that. I mean, it's just complete sell-off on the quantum computing front. But I don't trade with my ears. I trade with my eyes. So even though I probably could save some money by getting out now, and maybe I'd be right to do so, a stop is a stop, and I'll wait for my stop. I've already taken enough profits on all these that even if I get out at my stop, I'm up. So that's fine. Palantir is a little bit AI related. That might be why Sound is down. Six minutes till the open. BMA. Is that 1 year chart? That's just too smooth. I'm sure that's too low of an ADR. Let's see. That's a nice smooth uptrend. Let me see what the ADR is on this. BMA. Oh, it does not have good fundamental outlook, but it's really strong. And I trade with my eyes. 6% ADR. That's almost too strong. Banco Macro, Spanish company, shares jump after upgrades. Well, this has been doing well, and it's good ADR. BMA, good idea to keep an eye on it in case it's a stock to position trading over the next year. So I got out of Palantir yesterday. I got kicked out of it, and it's down a lot more this morning. But this morning I probably I'm going to need to get out of IonQ and Qubits, the quantum stuff. And that's just the way it goes, and that's the way you should do it. Just let the market take you out. If something's not good and it's going to stop out, let it stop you out. Let it take you out. Let the market and the stocks take you out. Don't guess. You have your stop. You've taken profits, perhaps partial profits along the way. Then it comes back down to your stop. It's heading towards your stop. I mean, you can, if that's your style, you can get out early. But you'll see that that's going to drive you mad because, you're just arbitrarily exiting. But if you let the market stop you out, you're giving your positions a lot more chances to contain their volatility and to be as strong as you thought they were when you got in and the reason why you got in. So it's pretty much a good idea to just, let the market stop you out. Now, one thing you can do is you can raise your stops along the way, smartly. I do that. Like, for instance, here on Qubits, probably I'll stop out when it breaks this pivot here. I don't know. I don't think I raised my stop. I didn't on the chart anyway. But below 550, that's a pivot breakdown. It's really a pivot breakdown already because of this pivot here. No, that pivot doesn't count. That's why it's not. The reason why it doesn't count is because it never went above here, thereby cementing this as a higher low pivot. Now that we're coming down here, this all becomes part of a move off of this pivot high here. Pivot point chart reading is an absolute mission critical skill that you must learn to understand. And there's some finesse and fudging you can do with it as well that you should learn. Like that sometimes you could use the close and not just like the low of the candlestick. Sorry for the yawning. But yeah, QBTS I'll take out at 550. Let's see if I have a similar thing I want to do on IonQ. IonQ is practically to my stop, which is practically a break even. It's still profitable and good for me. Essentially, I've reduced my cost basis on IonQ through profiting to 1965, and have 18 shares I'm holding, essentially at the cost basis reduced price of 1965. It says 38.14, but that's not taking into account all the profits that I've made. So my real cost basis is 18 shares at 1965. So if I get stopped out at 36, so 36 minus 1965, that's 1635. 1635 times 18 shares, that's $294 of profit on that particular one. It was a position that I had hoped would grow bigger, and I got in multiple times. But it is what it is, and it's profitable. It'll be profitable when I get out. Like Palantir, my exit yesterday represented a total profit of around 1.5K. IonQ, 300. What was it? Like $300 of profit if I get stopped out. And that's all due to the beauty of setting up a 2-to-1 for half your position. If you don't know, that technique, happy to teach it to you. Just send me a private message. We can set up lessons. But the idea is to be taking out 50% of your position across several exits up to a 2-to-1 reward to risk ratio. All right, market is open. And we will see what's going on. I mean, it's going to be the quantum computer divesting day. Quantum computing divesting day. It's actually getting bought up at the open, which is kind of strange. IonQ. Let's get all of them on the radar here. IonQ. Yeah, now it's dropping. Qubits and Qubit. Okay. I'm going to get out of all those at certain points. Okay, over on IonQ, where do I want my stop? I want my stop at 36, and apparently it's not. What's going on here? No, I didn't have my stop set to 36. I need to move that up. It's going to get close, so I need to be prepared. It is supposed to be 36, but apparently I didn't move it up at some point in the past. Let's make sure to move that up. All right, I got that set. Quick look at qubits to see if I need to get out of that yet. Like I said, I'm going to set my out on that to 550. And then qubit, that's the other one. That one's being bought up. I need to see the wicks. There we go. Yeah, I'm ready to get out of that already because it basically broke this whole flag and this pivot here at 1364. So it's kind of an all out on qubit, but I will wait until it draws that because the first couple minutes here are positive. Let's see. Okay. We are watching, look at this, IonQ. It's about to get stopped out at that $36 point I was talking about. And, likely Qubit, all these will probably likely go the same direction. There, I think, yeah, I got stopped out of IonQ, so now I'm just going to get rid of the rest of those shares as well. Flatten, there we go. Boom. All out on IonQ. And I'll mark that on the chart. You can see it's going blasting through my stop right there. And regardless of if it bounces or whatever, I can always get back in. You get out at your stop, guys. You don't second guess your stop. Good stocks don't go near their stops. So when a stock goes and hits the stop, it's worse than good. And you should respect that it didn't work out. You get out at your stop always. And you can always get back in. couple days later, a week later, whatever it flags, it's going to give you a signal. If it's going to do the right thing and you still like the thing, you can always get back in, but a stop is a stop. And you're just going to have to get better at placing your stops. That's another thing. Picking the right points. All right, qubit and then qubits. Let's take a look at qubits. I think that one may be getting close to my stop. Yeah, 550 is what I want to set up on qubits. Current stop on qubits is lower than that. It's down at like 250 or something. Yeah, I'm going to move that way up to 550 now because I put that stop in almost 2 months ago. And since then, you could definitely raise the stop to 550. It's really 560. So that's what I will do. I will take it out at 558 or something. 59. There we go. All right, that turns out to be just coincidentally around what it thinks is my break even. So when I hear the bling of the order filling, it's probably going to be the stop. On qubits. Now over on qubits, that's Q. Let's see, this is QBTS. The other one is QUBT. And yes, this is one I just want to flatten out of. QUBT, this had a nice opening few minutes, but now it's over. It's broken down. That's called a 5-minute opening range breakdown. You can give it 5 minutes sometimes when it acts like that. When it's moving up, you're like, all right, I'll give you 5 minutes. I'll give you a 5-minute opening range. And what happened is 1, 2, 3, 4, 5, 6, 7 minutes it spent doing that. And then boom, it broke the low just now. There it goes. So I flattened out of that. So I'm going to mark that up on the chart. We gave it a chance because it was kind of doing something. But we knew it was going to, happen, okay? But that's just how you play it. Because sometimes that will save your ass. So we're all out on qubit. Next one is qubits, and it's getting really close to our stop of 559. It's at 581 and likely to get knocked out. All of these were at a profit. So if we get out, the endeavor was profitable. Qubits, okay. That's the one we're watching right now. You can see it's getting really close to 559. How you guys doing? Okay, that was probably, we just heard something. That was probably it hitting that. Yes, it was. Okay, so now we flatten all out. All right, so we're out of our quantum computing stocks. And that's thanks to NVIDIA's CEO making remarks in After Hours yesterday at a symposium or something that we won't see practical application of quantum computing for a minimum of 15 years, probably more than 20 years. I happen to disagree, but I would split the difference with him. I'll take his wisdom as a grain of salt. I think that we could get probably an accelerated race to advance quantum computing faster than that, but maybe in a vacuum, in his own in a non-competitive environment, maybe 15 to 20 years. But I think in a competitive environment like we have, 8 years. So I think like it's close to half of what he said. And it might start with military, government, industrial, commercial applications, and then trickle down to business. And then now we're at like year 13 to 15, and then 15. He might be correct about how it might be 15 plus to 20 plus before it becomes a consumer level technology. He's probably correct about that. I don't know if that's exactly how he meant it, but maybe that was. Either way, the market is reacting. People don't want to be investing into something that's going to take 15 to 20 years before it starts to look like a profitable venture. That's just too far off. So smart money is taking their money elsewhere. So these are selling off. And first it'll go to cash, and then it'll flow into probably AI. AI is a more ready and more nearby good substitute for the quantum computing allocation. Right, AI. And as a matter of fact, we are seeing a pop in AI in Palantir off of the open, because there's probably some degree of allocating from the quantum into the Palantir and other AI stocks, such as Sound. Maybe we're seeing a pop in Sound. Yeah. I mean, it's roughly sideways, There's a bit of a fight there. I think all practical application of cutting edge technology right now, bleeding edge technology right now, is getting a bit reality checked. And AI is a little more ready than quantum computing. Hello, good morning. Is that Randy? I can't tell. Yeah, hi. I think that's where we're at on the market. I will notify everybody of any opportunities I see, and you guys do the same in our group. So thank you, everybody. We are, I believe, you tell me, I believe we're acclimated to the day here and to the market and the conditions and the environment we're trading in, and have some ideas of what we're going to do or what we're not going to do. And so that's pretty much what the morning show is all about, getting you orientated and properly aligned. Sometimes we find opportunities, and I mention them over the air, but you should also have developed your skills to the point where you find those opportunities on your own. I'd rather teach you to fish than be catching all the fish for everyone. And, so the most important reason we have the morning show is to set the right orientation and understanding of how the day could go and how to approach it every day. All right, so there you have it. Have a good morning, everybody, and I'll catch you back in the group. Thank you for tuning in. Bye-bye now.